Hey everyone, it's Friday morning, July 17th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Well, after weeks of strong gains, Wall Street finally took a step back. The Dow Jones slipped slightly, the Standard & Poor's 500 lost around 0.5%, and the Nasdaq had its worst day of the week, falling around 1.5% as technology stocks came under pressure. A big reason for the sell-off was Alphabet. The stock dropped more than 4% after reports suggested that the company's next-generation Gemini artificial intelligence model is running behind schedule. That also weighed on semiconductor stocks. Even though Taiwan Semiconductor delivered strong earnings, investors simply seem to be questioning whether AI valuations have moved a little too far, too fast. Earnings season also stayed in focus. United Health and GE Aerospace both delivered better than expected quarterly results before the opening bell. After the close, Netflix reported another solid quarter. Revenue increased by 13% to $12.56 billion. Earnings beat expectations, but the stock swung sharply in after-hours trading as investors reacted to the mixed results. Meanwhile, geopolitics remained front and center. Investors continued watching developments around the Strait of Hormuz after the latest U.S. airstrikes on Iran, while reports suggested the White House is considering additional military options, keeping uncertainty elevated in energy markets. On the economic side, there was some encouraging news. Weekly jobless claims came in lower than expected, pointing to a resilient labor market, while retail sales showed consumers remained cautious during June. So overall, yesterday was a reminder that even the strongest rallies take a pause sometimes, especially when high expectations meet uncertainty. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.